Hi, I'm Mai. Welcome to Bitcoin Basics, institutional Ethereum buying. This could be huge.
So, they're trying to tell you the crypto market is dead. They want you to look at the sideways chop and think the party's over. But let me tell you, while the mainstream media is trying to get you to look over there, Wall Street is quietly making one of its biggest, most decisive moves in crypto history. It's all happening behind the curtain, right under everyone's noses. This isn't just some small trend, it's a fundamental shift. Billions of dollars are being systematically funneled into Ethereum every single week, and it's creating the perfect setup for a massive supply shock. What we're about to witness could dwarf anything we've seen before, and if you're paying attention, the implications are enormous.
The mainstream media is completely, totally missing the biggest crypto story of 2025.
While they're busy distracting you with inflation numbers and interest rates, Wall Street has ignited a multi-billion-dollar buying spree on Ethereum, and they're using the new spot ETFs to do it. We're not talking about a trickle of cash here, we're talking about a tidal wave of capital. This is a coordinated accumulation on a scale that could rewrite Ethereum's entire supply and demand equation, potentially sending the price to levels that most people think are impossible.
In this video, I'm going to break down the hard evidence of this institutional invasion. I'll show you the on-chain data, the corporate balance sheets, and the ETF flow reports that prove this is happening right now. More importantly, I'll explain why this is completely different from any bull run we've seen before and what this epic supply squeeze could mean for the value of your Ethereum.
Evidence point 1. The ETF floodgates. All right, so you want proof? Let's get into the hard evidence. Exhibit A. The floodgates have been obliterated. I'm talking about the cash pouring into the recently approved spot Ethereum ETFs. Forget the launch day hype. What we are witnessing is steady, relentless buying from the biggest sharks in finance. For instance, in a single week in July 2025, these spot ETH ETFs pulled in a staggering $1.85 billion in net inflows. We've now had over a dozen straight weeks of positive flows, a screaming signal of persistent, serious institutional demand. This is not retail FOMO, people. This is the smart money making big, calculated moves. Leading the charge? BlackRock, the largest asset manager on the planet. Their iShares Ethereum Trust, ETHA, has become a Goliath in record time, sucking up over $10 billion in assets faster than anyone thought possible. One Bloomberg analyst even called its growth the ETF equivalent of a god candle. What else do you need to know? And here's the alpha. In recent weeks, the flows into Ethereum ETFs are absolutely crushing the flows for Bitcoin ETFs.
During 1 week in July, ETH ETFs got that massive $1.85 billion, while Bitcoin ETFs saw a measly $72 million.
This is a deliberate rotation of capital. Institutions are no longer just buying crypto. They are specifically, aggressively targeting Ethereum. They're using these ETFs like a giga vacuum cleaner, sucking up all the available ETH, day after day. Evidence point 2, the corporate treasury shift. If the ETF tidal wave wasn't enough for you, this next piece of the puzzle should be. Corporations are now adding Ethereum to their balance sheets as a primary reserve asset. This isn't just some financial product. This is a deep, long-term conviction play on Ethereum's future. We are seeing the start of a trend that looks a whole lot like what Michael Saylor did for Bitcoin. Public companies are now treating ETH as a strategic asset, not just a trade. Check this out. Companies like SharpLink Gaming and Bitmine Immersion Technologies. Recent press releases show they've been on an aggressive accumulation spree. SharpLink's stack has reportedly topped to over 438,000 ETH, worth over $1.6 billion. Bitmine announced they're holding over 566,000 ETH, valued at over $2 billion. Think about that. Just a few of these forward-thinking companies are now custodying billions of dollars in ETH. Why are they doing this? Because they see what's coming. They see Ethereum as the programmable base layer for a new global financial system, powering everything from stablecoins to the tokenization of all real-world assets. When companies like this make monster buys and their stock price rips, it sends a powerful signal to every other CFO in the world. The corporate treasury adoption of Ethereum has officially begun.
Evidence point 3, the on-chain trail.
Headlines are one thing, corporate reports are another, but the blockchain doesn't lie. And when we look on-chain, we see the digital footprints of this massive accumulation, and the evidence is undeniable. First, let's talk about the whales. In just one 2-week period in July 2025, mega whales, we're talking wallets holding over 10,000 ETH, went on a feeding frenzy, scooping up 1.12 million ETH. In another recent buying spree, a whole new group of wallets, believed to be institutional desks, quietly stacked hundreds of thousands of ETH. This is not random noise. This is patient, methodical, large-scale accumulation designed to acquire as much ETH as possible without blowing the lid off the price. Yet, second, and this might be the most bullish chart in all of crypto right now, is where all this Ethereum is going. It's being ripped off exchanges at a historic rate. The amount of ETH sitting on centralized exchanges available for you to buy is at the lowest level in years. Let that sink in. The liquid supply is thinner today than it was at the peaks of the last 2 gigabull runs. And where's it all going? A massive chunk is being staked. As of 2025, nearly 30% of the entire supply of Ethereum is staked, locked up earning yield to secure the network. This ETH is out of circulation. It is not for sale. It's in the diamond hands of long-term believers and institutions playing the multi-year game. This trifecta of whale buying, exchange drains, and massive staking is creating the perfect storm for a violent supply squeeze.
If you're getting value from this alpha and you want to stay ahead of these huge institutional trends, do me a favor and hit that subscribe button and turn on notifications. This is exactly the kind of analysis that can give you an edge in this market, and you won't want to miss what's coming next.
Section 4. The impact. The inevitable supply shock, so let's connect the dots. We've got billions flooding into ETFs. We have corporations converting their treasuries to ETH, and we have whales draining exchanges and locking it up in staking contracts. What does it all mean? It all points to one simple, powerful, and inevitable conclusion: a supply shock. A supply shock is what happens when a massive, relentless wave of demand crashes into a fixed or shrinking supply. For Ethereum, the institutional demand from ETFs and corporate treasuries is that unstoppable force. They have a mandate to buy, and they will keep buying. On the other side of the equation, the supply is being squeezed from every angle. Ethereum on exchanges is at multi-year lows, and nearly a third of all ETH is illiquid and staked. This creates an incredibly fragile market. Matt Haugen, the CIO of Bitwise, has pointed out that institutional players are buying ETH multiples faster than the network can create it through issuance. He's projecting a potential $20 billion in additional institutional buying over the next year alone. When your demand is consistently and dramatically outrunning new supply, there is only one direction the price can realistically go: up. And we're already seeing the early tremors. The recent strength in Ethereum's price is not a coincidence. It's a direct result of these supply dynamics. But this is just the beginning. When the next wave of retail investors comes back, drawn in by the new all-time highs, they're going to find that the shelves are bare. The cheap, easy-to-buy ETH will be gone, locked away by institutions and long-term stakers. That is the moment a price rally turns into a face-melting, parabolic run. Section 5. The what's next? Price targets and future catalysts. So with this perfect storm brewing, the question everyone is asking is, how high can ETH actually go? The first major boss battle everyone is watching is the resistance between $4,000 and $4,100. A clean break and flip of that level could trigger a massive wave of buying and a potential short squeeze, sending the price rocketing towards $5,000 in the blink of an eye. But the medium and long-term price targets from the pros are where things get truly insane. Many analysts, looking at these exact supply and demand charts, are now forecasting that Ethereum could hit between $8,000 and $9,000 by early 2026. Other credible firms are calling for targets between $10,000 and even $15,000 by the end of 2025. And these numbers, as wild as they sound, are based on the fundamental reality of this supply squeeze. A $15,000 ETH would give it a market cap similar to silver, a major global store of value. And this is all underpinned by Ethereum's growing utility. It is still the undisputed king of DeFi, with tens of billions in total value locked. It's the #1 platform for tokenizing real-world assets, and it's even seeing a major comeback in NFT volume. Conclusion: the quiet accumulation phase is over. The evidence is undeniable. Wall Street's floodgates are wide open, pouring billions into Ethereum ETFs. Corporations are now treating Ethereum as a strategic reserve asset, locking it away for the long term. And on-chain, the data shows a relentless supply drain from exchanges into the diamond hands of long-term holders. This is the perfect storm. Massive, sustained institutional demand is colliding head-on with a rapidly vanishing available supply. We are already feeling the tremors, but the main earthquake has not hit yet. This is why the institutional buying of Ethereum isn't just a bullish signal. It's not just big. This could be huge.
So what do you think? Is a $10,000 Ethereum programmed in for this cycle? Let me know your price target down in the comments below. And if you want to stay ahead of the curve with analysis that cuts through the mainstream media noise, smash the subscribe button and ring that notification bell for daily crypto updates. You will not want to miss what's coming next. Thanks for watching.